Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. As we wrap up the year that is 2024, it is a perfect time to take a bold look ahead. In this special year-end episode, I'm joined by returning guest co-host Alejandro Gutierrez for a wide-ranging conversation about what the future may hold in 2025. Year-end predictions can be a bit cliche, but this episode is anything but that. Alejandro and I dive into the ideas, trends, and technologies that we believe could transform industries, disrupt norms, and push boundaries in the coming year. Whether it's evolution of finance, advancements in blockchain and AI, or the forces driving innovation at a global scale, this episode is packed with insights and possibilities. And to top things off, we've even got a bonus prediction from a mysterious contributor. But we're not giving it all away up front. You'll have to listen in to hear the full picture. Join us for this exciting glimpse into 2025 as we set the stage for what could be a truly remarkable year ahead. So peer right into your crystal ball and see if you can see what we see. All right here on Money Never Sleeps. Alejandro Gutierrez, welcome back to the show.
No, thanks for the invite, Pete. It's always a pleasure to be here.
Yeah, and there's so much going on. There's always so much going on. I wanted to do a look into the future, 2025. Obviously, neither one of us has a crystal ball.
Yeah.
And year-end predictions tend to be quite a bit cliche, but I did want to put this one on record for the sake of posterity. And so no better person to have a chat with on this than you. And I kind of wanted to expand this out into more of a universal flow, but I know that what happened when I started looking at this, and it's been through some of the experiences that I've had in the last couple of weeks, last month really, that it all comes back to crypto. So I've had several conversations in the past month with extremely experienced investors, tech investors, early stage tech startup investors, whose view of blockchain and crypto is out of date and that there's a strong lack of appreciation. I had that chat with Mai Santa Maria recently where we talked about, is this all just an echo chamber? And she said, Pete, it's not. She's on the, she's very knowledgeable about blockchain and crypto and doing a lot on the policy side. But in terms of the forward-looking vision on where this is all going, a lot of the things that I talk about, that you talk about, that these are things she's also seeing coming from other angles as well. So that is
which is great, right? It's great to see that because, as I said, like echo chambers, I think have been drinking our own Kool-Aid for some time.
Exactly.
I'm finally seeing it, as you say, from that there are these other visions on different angles, and seeing it real makes me extremely glad, right? Yeah. Because there has been a lot of hard work for a lot of people just to be where we are at.
Absolutely. And I think, seeing some of the misunderstandings that are still out there and the people that push back on this space and see it as, okay, it's a casino, or it is, well, blockchain is good when it's in a private and permissioned context. I'm like, it's not. It's actually worse. I think if there's one prediction that's going to hold true, I'm going to try like hell to continue to educate the world on what this is all about. Okay. So Indeed. I know that one will at least come true. But I went through and I kind of did a bit of digging and, tried to help frame my views here. And it turned out that a lot of this is, when I look back at the investment thesis that Hugh McGurr and I updated back in September around our beliefs about what was going to happen, that when I looked at where I thought things were going to head and I looked at my beliefs, then they were pretty much in alignment. So let's dig in and talk through them and see what unfolds from this chat when we dig in, okay?
Fantastic. Let's do it.
Okay. So my number one, I think that traditional finance, or TradFi, will embrace tokenization. It's been on the tip of their tongues for years, and we saw lots of excitement around this back in 2016, 2017. It died down for a while, and it tends to ebb and flow with the bear cycle and the bull cycle.
Yeah.
But TradFi embracing tokenization to help them sell more investment opportunities. And that's one of the realizations that I've had this year, is that so much of the real-world asset, or RWA tokenization, had been undertaken on platforms that probably traditional finance investors or TradFi investors wouldn't ordinarily find themselves. And where I had seen a number of the RWA platforms positioned towards is towards crypto natives that had been looking for more of a predictable yield pattern on an allocation of their portfolio, given that they had been trading in crypto for so long and had built up some wealth and were looking to park a bit of it. Perhaps they wanted to get a house in a couple of years, right?
Yeah.
And so things like BlackRock's Biddle Fund, Franklin Templeton have one. Talked to the Swarm guys a few weeks ago, and they have their tokenized gold.
Yeah.
That conversation specifically with Timo Leyes and Philip Piper was around, this has primarily been to try to get the crypto natives to look at this space. How do we actually get the TradFi space to look at why should they care about real world asset tokenization? Why should they care about, oh, look, I can get this treasury fund investment through a token? Some of the people that I've spoken with over the years in TradFi that say, listen, tokenization from a cost and efficiency perspective is wonderful, where you take a traditional financial instrument and you make it available in token form so that it can trade in the same way that a crypto token trades.
Correct.
And they said, it's wonderful, but I just want something that helps me to sell more. The bottom line is interesting that it can reduce the cost and make things more efficient, but that's a long-term play. In order to get these things over the line in the big traditional finance houses, they need to be able to convince their executives that this type of mechanism, a token, a tokenized bond, a tokenized equity, a tokenized future option, whatever, that needs to be something where it opens up a new market for them.
Yeah. So look, I think there are a few components in there. Like, as you know, like we tried these a few years ago when we were in the Factor Labs, right? That was like, okay, how we can just bring these big institutions to start looking at the tokenization space. The main issue that I think is still there, right, is liquidity. Liquidity is still non-existent, right? And the other component, like, because you're going to be creating a lot of efficiency, as you say, but you need a secondary market. So in that case, you can start exchanging these tokens, right? And people can just in and out as required. That's pretty low as well. If the traditional institutions are not coming and are backing actually or embracing the tokenization technology, I don't think much is going to happen.
Yep.
I think that's the key. The other component is like, it was pretty interesting for me to see last year when I was in Singapore for the FinTech Festival. Every single large institution in Singapore had a digital assets practice and a tokenization practice. So they're ready. They're ready. I think they're just waiting for the perfect moment to be just launching this.
Yeah. What I want to know is what element of it will help them sell more to traditional investors.
And that's the other point I was going to mention. You see, we go back into the UI UX, right? But if you want these people to just get a taste of it, they need to just try themselves. And I don't think any institutional or like traditional investment fund will be playing around with wallets as we do in the crypto space. So what is going to be that killer app, or what is going to be that killer UI technology that is going to allow these guys to come and just trade in the crypto space?
Yeah, I'm thinking of a couple of, I knew talking this through with you would open my mind a bit. Thank you. I'm thinking of a couple of things and this intersection of Fidelity and Revolut. So Fidelity in the 90s opened up their funds network, and that they were one of the first retail investment platforms that had a thing called a website. And so they offered their Fidelity mutual funds on this website, but then they got this great idea to say, well, why don't we offer everybody else's as well, as long as they can approve the funds and they can do their due diligence on them, and they put them onto their funds network platform. People are like, you're crazy. You're going to cannibalize your own funds. You're selling other people's funds. And it's like, well, people are always going to buy these funds. What we're doing is we're getting distribution fees off of them.
Correct.
So that was actually very helpful for them in the 90s to get things going. Looking at what Revolut are doing now, Revolut, I had a friend of mine at my kid's soccer match the other day come up to me and say, hey, Pete, I just bought crypto for the first time. I'm like, really? Where? He's like, Revolut. I'm like, you don't really own it. And neither does Revolut. Yeah. This is all just magic behind the scenes. He's like, really?
Yeah.
I'm like, yeah. But what Revolut are doing is that they're trying to generate fees off of an asset class that they think is marketable and that they think that their customer base or perhaps new customers will buy. And so is there a play here that says what Fidelity did with the funds network in the 90s, that you can actually make it easier for retail investors all over the world to make investments in funds or in these other types of mainstream assets? And doing so via tokenization means that you will naturally attract a wider market, and that people don't care. Like where the end investor doesn't care whether it's tokenized or not. It's just what this framework enables people to sell more of. Is kind of what I'm coming back to. So
they don't need to know, right? And that's the key. They don't even need to know if it's tokenized. Like they just should have the same experience. And you touched into a really important point, that is the distribution. And that's key. You can have a fantastic product, but at the end of the day, if the distribution is not there and it's not right, nobody's to come. So that analogy is perfect. And well, maybe that's an idea, Pete, for Techstars 2025.
Maybe it is. And it's like, just think about all the different outlets in, the distribution points in crypto right now. Right. And that those distribution points are centralized exchanges. They're not going to touch anything that is even anywhere near a security. They won't. Maybe they will with legislation coming in 2025 with some more clarity, perhaps. And then you've got the decentralized exchanges. They're not going to touch this asset class because they already have enough heat on them. But you've got then, just wallets and utilities. Wallets are software, but however, some of them had been taking some heat this year. So I think there's something here, but I will take this one back to what will be the incoming class of 2025, because I think we're going to have at least one that is leaning in this direction. So, okay, that's one.
That's
Number
one.
two, so much excitement around stablecoins. Here's my prediction. So that a major e-commerce outlet will integrate a pay with name your stablecoin option into their checkout. Okay. And that obviously Tether and USDC are the number one names out there in the $200 billion stablecoin volume. But Ripple is starting their stablecoin rollout.
Is launching today or tomorrow?
Yeah, I think it's launching today. And they're launching that both on XRP, which is the native Ripple chain, but also on Ethereum. Ripple has been building for 8-9 years now in this space, maybe closer to 10. And they are the name that the big traditional financial houses have all met. And that has been their positioning in their market for the longest time, is getting these big traditional finance houses to use Ripple internally or use Ripple in this cross-bank network to move money around. Now they have their own stablecoin. So I think that will push things forward. Saw as well, BVNK just raised $50 million to expand across the US. That was led by Han Ventures, who is ex-A16Z Crypto. Also Coinbase Ventures came in on that one. And they're basically kind of similar to Bridge, where they're stablecoin infrastructure for enterprise. So
it's very interesting. And all that space in 2025 is going to get even more interesting. I know you saw as well the partnership between Binance and USDC, which is a fantastic move, if you ask me, for USDC. Because all these jurisdictions were, because when BUSD disappeared, right, like it was a big gap in there that was filled by mainly Tether. So now with the partnership, I think USDC is going to just get into jurisdictions that before there was not much appetite, which is pretty interesting.
Yeah, definitely. And that was what I talked about with Linda Zheng a couple of months back when we looked at the Castle Island Ventures Stablecoins and Emerging Markets report, was that because of Binance with Tether together, that Tether is just the most popular stablecoin used in emerging markets, because Binance is the most popular wallet used in emerging markets because it's the easiest to access. So, or not wallet, but centralized exchange, sorry. And that pairing there is plenty of room now for USDC to enter into the markets where it's going to start becoming more important that it's USDC that is being transacted in those markets via Binance rather than Tether, because of how USDC Circle, their issuer, has embraced MiCA, the electronic money institution regulation as well. And they did that pre-MiCA. So I think that's a pairing there that's going to be really interesting that we'll see a lot more from, which will be good.
Yeah, look, and another point actually to support that prediction, Pete, is infrastructure has been created in order to use optimized UI and UX. So you have the guys from, for example, Coinbase launching the checkout button that allows you to pay in crypto cash with just one click. That's it.
Yep.
So we're seeing more and more of that. And I think the easy just to integrate these crypto solutions is going to make a big change.
Yeah, it will. And the reason why I think it's a major e-commerce outlet, and this is something that Owen Fitzgerald and I talked about a couple of years ago, is that Amazon, for example, you put an opportunity in front of them to save 1%, that's something like 200 billion a year, some ridiculous huge number. Sorry, maybe closer to 2 billion a year. And in terms of their revenue. And when you look at the credit card framework, that's 3%.
Yeah.
And so, and somewhere between 1.5% to 3% of cost for them that they need to absorb. So if you can take that away, that's a huge amount of revenue. And we're not saying that everybody's going to start using stablecoins to pay, but can the stablecoin infrastructure providers like Bridge, like BVNK, make it totally seamless?
Yeah.
And I know that Solana was working with Nuve on some of the credit card network experimentation, and USDC was part of that group that was working on that last year. So
yeah,
plenty of examples here of where we see this going. So that's 2. Number 3 is decentralized identity with verifiable credentials that you own. You own your own credentials rather than someone else owning them. Will start to scale. And what got me thinking about this, Alejandro, was where were we? We were at the Vampire Weekend gig at 3 Arena a couple of weeks ago here in Dublin. And I had done this before in terms of going into, sporting events, whatever, where you're just tapping your phone to get into the event. Okay. Yeah. Because your tickets are there in your Apple Wallet, and just the tap and no look at the tickets, nothing. Looking at human behavior, looking at the increase in the number of different countries that are implementing digital identity. I just think there's enough momentum there and enough progress that the smartphone manufacturers have made to enable this to take hold.
Yeah.
I think this is something that we're going to see a lot more of in 2025.
I fully agree. I think the technology is heading that way as well. But for the use perspective, especially in developing countries, right? That is extremely tedious to just get IDs and proof IDs, but also from the provenance perspective, like the amount of fraud that is committed, like all these digital identities can help.
Absolutely. And I did talk about this one with My Santa Maria to a great extent earlier this year. And there's lots going on at the European level. And although that is not decentralized, it is a step in the right direction.
Yeah.
And I think that first get it into digital form where it is less of a hassle for the consumer, and you start to open up that trust in what's in your wallet and who's issuing that to your wallet. And when I say wallet, I mean Apple Wallet or Google Wallet, crypto wallet.
Yeah.
And that eventually that we're going to have these bridges built. And one of the companies we invested in this year through Techstars, ProofSpace, shout out to Nick Mason, are working on this and working on infiltrating that, right? Infiltrating is too strong of a word. Integrating into the enterprise identity tech stack to make decentralized ID and reusable credentials real. So this is something that I think we're going to see a lot more of. And Niall Dennehy as well is working on this with the Care Wallet, with Aid Tech, with everything that they've been able to progress this year with dispersing humanitarian aid and that linkage of payments and identities. So lots of progress being made this year, and I think we're going to see a lot more next year. Number 4, I think at least we're going to see at least one large gaming studio will integrate blockchain, probably on Solana, into their IP, and that's going to create ownership opportunities for game players. People say, well, we've been seeing this for years. Why is
Yeah.
it all going to start to happen next year? And I think it's just the maturity cycle that we're seeing, for example, analogous to traditional finance, we're seeing that on the gaming side. And we've already been through version 1 of this, which is, hey, everybody thinks that your player, your avatar in a game can be an NFT and you can take that from one game to the next. No, that's not how it's going to work. It's that we see game studios like Ubisoft are integrating a lot of on-chain experimentation into some of their platforms and what they're working on. So I think we're going to see a lot more of that. And I was thinking about some creative ways that you could tokenize IP and moving the ownership of that IP out to the user. Of course, that could be avatars in games. Of course, that can be digital merch that you buy, the dance move in Fortnite, those types of things. I don't think we're there yet, but where this will end up going is that we'll see creative ways for gaming studios to bring the ownership, hand the ownership of the IP of games over to the user.
Yeah.
And to, there's tons
into
of
their
value
community,
in monetizing
right?
this kind of network.
Yeah, just giving the chance to a community to own not just the assets in the game, but actually own the game and defining actually and deciding where the game is going from the development perspective, etc. That's pretty interesting. Look, Avalanche is doing pretty well on Web3 gaming as well. They launched this game that at some point was number 3 of the grid, I think is the name. So they have probably 7 million wallets hooked into this game. It's insane. It's crazy. So, and how's that people were not even realizing actually that they were playing a Web3 game.
Yep. And that's the great thing, like we said about, the echo chamber, is that just hearing more and more examples of this technology taking hold, and that some of the best part of this is just that it's in some headlines, it's not in all the headlines. And that when people say to me, Pete, what is it that you're working on? And I say, listen, it's just the next version of the internet. That's all it is.
Yeah.
A guy called Matthew Lamerrill from Blockchain Co-Investors said this last year, I think, that in the 2000s, we worked on the digitalization of media and information. Now we're working on the digitalization of financial services and commerce. That's all it is.
It's new financial structures and new ways to monetize, right?
Yep. The next one is number 5. I think we'll see an ultra secure and killer UX DeFi super app that is non-custodial. I got to unpack all this. That it will come to market that will make it oh so simple for anyone to safely earn a yield on their crypto and stablecoins. Where this came from was up until recently, you were able to just hold USDC, the stablecoin, in your Coinbase app, and perhaps also in your Coinbase non-custodial wallet, and just earn somewhere between 4.3 to 5% rewards on your USDC. And so if you've got a financial commitment that's a year out and you want to have that cash in hand, getting 5% on it in a way that you can easily just pull that back within seconds and have that liquidity at your fingertips, that's really hard to get.
Yeah.
So in the European Union, they can no longer offer that to EU residents. So I think there is a big opportunity for what I'm calling this DeFi super app, where it's just so simple for people to take stable coins. They've converted their savings from fiat into stable coins and to start to earn a yield on that in DeFi. And this was one of the other things I was talking to the soccer dad about, was DeFi has evolved over the last number of years in a very, very interesting way. To make it simple for the soccer dad, I said to him, because he's familiar with credit default swaps and interest rate derivatives and all these things that big institutional traders trade in order to generate 2 to 3 to 4 to 5% yield and be able to arbitrage off that and turn a profit off of that. I said to the soccer dad, I said, just take that and put it on a much smaller scale. And you've got these daily DeFi traders that are moving around from one platform to the next, one dApp to the next, or decentralized app to the next, to be able to generate arbitrage. And they go long, they go short, in the same way that institutional traders were doing this. I said, but you need a PhD in DeFi in order to do this.
Yeah, more or less, actually.
So I want to see the super app. And it still needs to be non-custodial, because once you get it into custodial, you're taking on counterparty risk. Okay. Now, there's all types of risks that you're going to have by trading in DeFi in terms of things like impermanent loss. I think someone's going to figure this out and make DeFi yield, or decentralized finance yield, opportunities available in a simple, straightforward framework. I think we're going to see someone propose something like this in 2025, because I think the technology has moved on. Things like account abstraction has made a lot of this available. So I think there's something there brewing that we'll hopefully see in 2025.
So basically, you want to see a application that has Aave plus DYDX plus everything, perpetuals, compound, et cetera, and allows you as well to do on-ramping.
Yep. Make it incredibly simple. The Ember AI guys from the Techstars class of 2024 are working on some of this to turn your intent of what you want to do into natural language, so that these transactions can just be executed. They've got the core of this nailed, but I'd love to see it come out in full flagrant UX form, a very easy to use super app. There's lots of technology components and infrastructure primitives that we need to see take hold here in order for this to become a reality. But it's something that I'd be excited to use at some point in the future. So, number 6, the agentic web. Have you thought about this much or seen this pop up at all?
No. What is the
agentic web? So I don't want to call it Web 4. I don't even want to go there, okay? Because it's hard enough to deal with Web 3. But this is where we have AI agents executing investment and commercial transactions on our behalf.
Yeah.
Okay. It's something I read a few weeks ago. I forget who said it, but that maybe we weren't meant to use Web3 at all. Maybe AI was meant to use it on our behalf. Maybe AI agents were meant to use it on our behalf. To say, hey, this AI agent has learned about me. They know where I want to go over the course of the next year, and that they're out actively looking to execute a transaction for me for a flight, for a hotel, and are doing that through stablecoins.
So this is extremely interesting, right? Like, because I did a post about this probably a month ago.
Yep.
Because what we're seeing, like Sam Altman, right, predicted that 2025 was going to be the year of AI agents. But funny enough, it happened in 2024 in crypto, right? And we're seeing a huge explosion of this in the based ecosystem. There was a podcast from the guys in Bankless, people from Pantera Capital.
Okay.
Talking about how financial institutions are looking at these. It's really interesting, right? But it was saying traders get tired and traders make mistakes and traders, they need to sleep. AI agents don't. So when you are talking about an ecosystem that never sleeps, well, you need to have either people in multiple places around the world that can do it, or you have an AI agent that doesn't need to sleep and is going to be there 24/7.
Mm-hmm. And that's handing over the keys, literally and figuratively.
Correct.
And I mean, I use ChatGPT so much during the day. I'm like, I call it my coworker, and I'm paying this coworker $20 a month.
Yeah.
It's pretty good for what I'm getting out of it, but I'm not handing the keys over. ChatGPT doesn't really know me. It's still nascent, but it's incredibly helpful. And there are other AI apps that are more advanced and that you can pay more for, that do more for you. I don't want to unpack and go down this rabbit hole, but
what is the risk? Like, are you going to be losing your intrinsic capability of thinking or creating because there is just so much support from AI agents? It's an interesting question, huh?
I think this one is, comes back into human evolution as well.
Yeah.
And that what do we want machines to be doing versus the decisions we want to be making ourselves. And I think a lot of the progress here is just generational. And it's what the kids are used to using, the kids are used to doing. Like someone said to me that their kid was like, why would I ever use Google again now that I have ChatGPT?
Yeah.
And why would I ever start looking at TripAdvisor for where to go and what the best place is to go eat dinner when I've got an agent that knows me and is looking out for these specific things for me and can propose these things to me. We've seen tons of propositions like that over the years that were not AI fueled, but now we're seeing more and more of it. That I think this is going to move pretty fast.
Like it is going to move fast. Like, it's really interesting what you're mentioning about like a search engines, right? And you're seeing it's a generational thing. So that generation, what is now? Which generation are we now? Double A or whatever?
I think it was alpha, and now there's also a generation beta.
Beta. So those guys, they use TikTok mainly as a search engine.
That's where they live. That's where they are online.
It is like how to use data search engine. I have no idea, but that's what they use.
Yeah. That's where they're spending their time. And it's like all these people that started saying, well, what is metaverse? What is metaverse? What is metaverse? Yeah. It's like, well, there's the Hollywood version of it, but there's also the fact that we are living in a 2D metaverse.
Yeah.
And that there's so many kids right now. And I see that in my own kids, where it's that this is their, not even an alternate reality. It is their second reality. They've got real life where they're engaging with people at school, but then there's so much of that takes place and happens in the virtual world after that, on TikTok, on Snapchat, on wherever.
On games. Like when they go and start playing, they go from school, they go and they get together again online and they play games. And it's an interaction on a metaverse, basically.
Yeah. And seeing kids that will say, listen, I want to go home after school and do multiplayer FIFA rather than actual, go out and climb up in the mountains, right? And but listen, continuing on the blockchain side of this, that blockchain as attestation, and these are the two strands, and I think it was probably A16Z, and I'll put this into the show notes, that put out what they're excited about in crypto in 2025. And they were talking about these two strands of blockchain and AI together. One is where you've got AI that is fueling things like DeFi, for example, like I just talked about with the Ember AI example, where you are using artificial intelligence and large language models to say, we can take these intents of what you want to do. Well, take your natural language and turn that into actual transactions that are executed on chain. Wonderful. The other strand of it is where you're using blockchain as provenance, as attestation to whether something is real or not. So the example that Chris Dixon gave on a podcast recently, and he's A16Z crypto, was that, all right, listen, imagine a politician getting off stage after just having said something where there was audio recording, where there was video recording, and where he's got an app that, hey, you just got off stage, you just created some content here. Is this really yours? Did you actually really say this? And that attestation is stored on chain, it's immutable, and it's auditable. You can see all that. And that will allow us to take this kind of blue tick context that we see on X and apply that to all types of media on whether it's real or not, using blockchain as that attestation layer to say that this actually did exist. This was actually this politician speaking or this person speaking, to avoid all of the fakes
and all that. But you know what is really interesting? Like we have been chatting about this. So Mitchell Travers, that is from Verida AI. And with Mitch, actually, like we have multiple conversations and even discussions about even creating a paper about this, but it's how, like in databases, how you're going to just identify at some point what is real and what is not real when you are to creating models. Like for me, like in the future, like hacking is going to be infiltrating databases and just starting exploring all sorts of different information that you don't know if it's valid or not. What is going to be preventing that? And if it's not some level of attestation of provenance that the data is real. And that's what I believe blockchain is going to play a huge role, just to make sure that these AI models are still truthful to what they were designed for, right?
Yep, absolutely. There are even advisors, entities, companies that are spinning up just to make sure that AI is safe, that AI, it doesn't actually drive us in the direction of who knows what is real at all anymore. I think we're kind of almost there already, and that we need to introduce some guardrails here so that we could step back a bit. Not censorship, but guardrails.
Yeah, like, because the big problem is like not even the people that have been behind all these models really understand how those models work. And that's scary, right?
True.
To say the least.
So I've got one more, which is number 8, which is the Financial Innovation and Technology Act for the 21st century, which is FIT 21.
Yeah.
That aims to establish a comprehensive regulatory framework for digital assets in the US. And I think we're going to see this happen. That's a prediction. We will see this happen in 2025. There's 2 things that need to go in. 1, FIT 21, 2, the stablecoin bill.
Yeah.
Okay. And on FIT 21, we've got a lot of good stuff happening. FIT 21 made it through the House of Representatives. It's now waiting in the Senate for a companion bill. And I'm not sure on the status of the companion bill, but the right people are now in place to take these things through. So the Senate Finance Committee, when the new Congress convenes in January 2025, crypto-friendly Senator Mike Crapo is expected to assume the chairmanship. Crapo rhymes with crypto, right? We're good, okay?
Yeah.
We also have, it's the Senate Banking Chair, which will really be driving this through. Sherrod Brown, who was totally anti-crypto. He was dumped out, replaced by Bernie Moreno. And
Bernie Moreno is Colombian, right?
Yep, absolutely. Yeah. Shout out to Bernie. And crypto-friendly Tim Scott is replacing Sherrod Brown as the chair of the Senate Banking Committee in 2025. We'll also see the Senate Agricultural Committee will play a role because they oversee the Commodity and Futures Trading Commission. And that regulates crypto derivatives in the U.S. today.
Yeah.
Back to the House of Representatives, Tim Scott's counterpart on the House Financial Services Committee is Representative French Hill, who is also crypto-friendly. So all of that good stuff there, and that's going, the FIT 21 Act is kind of the market infrastructure bill that will provide a lot of landscape here and even start digging into kind of the Investment Companies Act of 1933 or the SEC Act of 1933, 34, whatever it was, to start to change some of these old laws here, or will change some of the old laws. So we're going to see that. I think the stablecoin bill, we will also see that push through. And the question is, why get so excited about crypto regulation, about regulating the space we've been working in for so long? It's that it's not, the regulation is helpful and will allow more scaling. So that's something to get excited about. But what it kills, or what it should considerably cut down, is the regulation by enforcement context that we've all been living in.
All the fear, right? That fear of doing anything in America suddenly can disappear. Like, use every single one of those names are pro-crypto people. So we have suddenly the engine that I think will just fuel the industry to the potential.
Totally.
We need
so
to.
no, I'm definitely excited about that. So that's my number 8. What are your predictions that you'd like to express?
Predictions. I have 4. I chose 4, right? So the first one is, last week or this week, there was a report from Electric Capital about what is happening in the developer space. Interesting things, like, as every single one of these different reports, I think you need to take it with a pinch of salt. But one of those was saying that Solana now has the largest amount of developers, or the growth in total. But one point actually that struck me as pretty interesting was the increase on multi-chain developers. I think it was an increase of 34%. So I think the trend for me will be that we're going to see that number probably doubling up next year.
Okay.
I think people are starting getting more interested and just coming out of that maxi mindset and seeing the opportunities, especially smaller dev shops. So now they understand that having devs that can handle all the different languages, as it happens in Web 2, is a great opportunity. So the question that I have in here is, okay, is this a sign of maturity in our space somehow? That now is not about just being a maxi in one of the ecosystems and forget about the other ones. Now you're seeing some businesses build and seeing opportunities.
Yeah, it's a really good one, because in order for this space to grow, we need more developers in the space.
Yeah.
If multi-chain developers becomes the norm and the developers have the tools to make that a reality, then we're going to get naturally a lot more developers into the space because it's going to be easier for them to be multi-chain rather than just dedicated to one chain.
Yeah.
So really like that one. That's a good one.
That's the first one. Second one, just going back into the AI agents.
Yes.
Believe the AI agents are going to be driving the next meme coin run.
Okay.
I think we're starting seeing it with some of the agents with Bixby and Truth Terminal. So you have two examples in there, right?
There's a lot here, and it's like I said, earlier, that when I'm talking to someone who talks about the crypto casino and all that type of stuff, I'm like, well, listen, there are legitimate crypto casinos.
Yeah.
Right. Talked to Nigel Eccles about this last week, and that's just that there's a specific positioning of that in the market, and there is meme coins, which is looked at as pump fun, pump and dump, whatever, but this is tokenizing emotion is what I kind of always refer to it as. And I was talking to someone, it might have been you, maybe it wasn't, about Anatoly from Solana and about his view. He wants to decentralize NASDAQ, one of the major US stock exchanges.
Yeah.
And that why is he allowing all of this meme coin activity to take place on chain, on Solana? Well, one, it's decentralized, so he can't really,
you can't stop it.
Right.
Yeah.
So but at the same time, he's like, well, listen, we just need this chain to be tested, to be iterated out to the max. If we're going to actually be able to handle things like high frequency trading on Solana, which is what you see going through NASDAQ. So if you're doing it with tons and tons of meme coin transactions this year and next year, and absolutely fine. Let's just push it all through, and someone said to me when I said that, they're like, well, yeah, but what about the individual? And what if, they lose money on it? I'm like, that's their problem. That if you start trading in meme coins with an expectation that you're actually going to have a safe, secure investment, forget about it.
Yeah, it's just a gamble. It's like that's when you go to the casino, right?
But it can be fun for people if you're messing around with a little bit of money, just in the same way that an online casino can be fun. And
just need to be responsible. I think the problem with these things is the centralized nature opens these to probably some crowd that shouldn't be doing it, and it's addictive, right?
It
you
is.
Just jumping, pump that phone is addictive.
It is, but there's some. I see founders experimenting with meme coins as a way to kind of start to understand what their true tokenomics will be for something way beyond meme coins. So I think it could be helpful in that way as well.
I think that approach of experimentation is interesting, and there are really important components that are coming out of it. There are some really interesting communities that have come out of these meme coins, marketing tactics, there are things that can be, and then from an infrastructure perspective as well. You're testing networks, right?
Yep.
You're testing apps.
Absolutely.
No, it's not all negative.
No, I think we got to take both sides of this,
Yeah.
So
third one. So this one, I don't think it will surprise many people, but United States will adopt BTC as strategy reserves, and probably multiple states will go first. Maybe Florida, Texas be some of the ones. I think the guys from Vanek did some prediction on this as well. But what is going to happen is this is going to be forcing a lot of the bigger countries to come and do the same. And we saw that with Brazil. I think Brazil announced it a couple of weeks back. They are preparing. We're starting seeing many countries coming into the game. Well, we saw what happened with Salvador now. It's a good business case there.
We've seen just in the last 24 hours, Nick Carter took a bunch of heat for this because he kind of came out and said, listen, he doesn't see it happening because that means that the dollar is a problem and that the U.S. government won't say that the dollar is a problem. And so hence we're stockpiling Bitcoin and have this reserve that's being built up around that. And then he had a whole bunch of haters coming back to him and saying, how could you say that, Nick? This is a macroeconomic discussion that I think needs a whiteboard with supply and demand curves and monetary policy and those types of things. And that's a conversation that I used to have in college, but that I don't do so much anymore.
It's a good one. It's a good one because, you say, what are going to be the impact on the American economy if this happens.
Definitely. Okay. And then your final prediction for
Final one,
2025.
I think in tune with the previous one, right? That is, I think at the moment, I think there are 7 countries that are mining Bitcoin. It probably is going to be double that number. We will probably see 20 plus countries starting mining Bitcoin, like government using the efforts to mine Bitcoin. And what I believe here, this is going to be pushed by the BRICS, because like now you're seeing Russia has been into that narrative. You're seeing Putin actually talking more and more about Bitcoin and the value out of it, Erdogan as well. We mentioned that Brazil announced that they are exploring getting a reserve fund. So
it's interesting.
I can see it happening.
It's a good point. And the term BRICS has expanded over the years, right?
Yeah.
BRIC was Brazil, Russia, India, China. And now there's like 6, 7, 8 other countries that are included in this. And you look at their economics, their economies, and that obviously so much of global commerce is tied to the US dollar. But these are economies that have grown over the last 25 to 30 years that perhaps may not be as connected to the US dollar. They are, but do they need to be? If Bitcoin is what it is.
Yeah.
And so them mining Bitcoin is something that is viewed as a way to start creating less of a dependency on the US dollar.
Yeah.
And then if you've got the US in your last prediction who are building up a reserve in Bitcoin, what's going to happen here?
Is that going to be the next Cold War? So is the next Cold War going to be the who owns and mines more Bitcoin?
Oh, this comes to mind. And this is terrible that this is coming to mind. The U2 lyric went something like, from Sunday, Bloody Sunday, went to claim the victory that Jesus won. Not to get all religious on you. But now we're looking at this from the perspective of to claim the victory that Satoshi won. Who's going to claim it?
Who's going to claim it?
Get all sovereign on us again? Who knows?
Who knows?
The world moves in circles. The universe moves in circles.
Moves in circles. That's just cycles, right?
Yep, absolutely.
And just to add some fuel to the fire, I asked a fintech and funds industry legend, Owen Motherway, to share his predictions for 2025. And just so you know, he had no sight of the predictions that Alejandro and I came up with, so the symmetry was quite encouraging. Take it away, Owen.
Quick thoughts for next year, I think, will be the continued proliferation of stablecoins, but possibly particularly in other currencies than the US dollar, so maybe Hong Kong dollar, Japanese yen, and so forth. Tokenization of funds will really start to kick off, although I think will only really be mainstream in about 24 to 30 months from now. We will see more and more of money market funds being tokenized because they're effectively like an asset-backed stablecoin and can be pledged as collateral. Real-world asset tokenization kicking off, but I think verifiable credentials in a wallet, where you could apply that to team audits, tax numbers, clearance certs, and so forth, I think is an area. And then lastly, in an Irish context, the establishment of Digital Assets Ireland, bringing together 20 plus VASPs in the arena, will hopefully create a new micro industry and a domicile of choice for digital assets under NICAR. So they're my predictions for 2025.
Well, listen, Alejandro, that's a great place to leave things off with our predictions for 2025. And I think we should revisit these at the end of 2025.
Yeah,
see which ones came true.
Let's do it.
All right.
Awesome.
And have a fantastic Christmas.
Thank you very much, Pete.
All right, pal. That does it for this week, folks. Thanks to Alejandro for co-hosting this episode with me for the last time in 2024. We'll be back on January 10th, 2025. So until then, have a happy and healthy holiday season and a kick-ass start to 2025. Check out the show notes on moneyneversleeps.ie for all of the relevant links to go deeper on what we talked about today. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify, as it helps others to find the show. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. There are plenty of links in the show notes on moneyneversleeps.ie and how to get in touch, so don't hesitate to reach out. Finally, until next time, thanks for listening. See ya!